just pulled the VIX over, which hopefully you can see. And let's click that off, move that out of the way. Actually, I can move that onto another screen. No, I can't. Okay, leave that there for a minute. Going back to what Anna was saying about the VIX, and if I just pop open the daily, let's go start with the daily chart here. Just get away from this 6 array, we go to a single array. Apologies, sorry, I clicked the wrong one. Sorry about that. Let's go back to the 6. Where are we? There we are. There we are. Right, let's have the daily. There we go. No, doesn't want to know. Okay, fine. We'll leave it at the 6, wherever it is. There. Okay. Basically, the issue we highlighted with the VIX was simply this, that the VIX had been declining from the highs of 60, 70, wherever it got to a couple of months ago, and was generally declining lower, but it wasn't declining at the same speed that you would associate with the surge higher in equities. In other words, there was this disconnect. And the reason there was a disconnect was very simple, because when you looked at the VIX in terms of levels, on the daily chart, where the indices had been rising for some considerable time, the VIX was sitting around 10, 11, 12. That was its natural resting state, if you will, where risk on appetite was rising, equities were generally rising. Yes, you had the occasional pullback and what have you, but generally speaking, that is where the VIX sits, and even into single figures when everyone is complacent and we're getting to potentially a top in terms of the markets. In this case, we had the plunge in equities as a result of Corona. We've had this spectacular recovery, almost a V-shaped recovery, where indices, particularly the NQ, is now breaking out into new high ground and has indeed broken out into new high ground. So we've had the recovery. In other words, if you take the NQ as an example, the NQ has gone from a level, plunged, recovered to a level above where it was previously, but that was not reflected in the VIX, because if the VIX was in alignment with that price action, what we would have expected to see was the VIX returning to its resting state. In other words, down in the 10s, 11s, and 12s, and it hasn't. It's been sat around this level at 25, very sluggish, and that's the other aspect to it. We've had big up days on the indices, and that has not been reflected in the VIX. It's been narrow spreads, very sluggish, declining, but not declining with any momentum, certainly with no speed. It's just been sliding lower, is the way I would describe it. It's certainly not been falling. And so there's been this disconnect. And if you overlay that on top of all the other aspects of roaring yen pairs as of last week, in terms of volume price analysis anomalies, you put it all together and you come up with this conclusion that there is a correction coming, and that is precisely what we're seeing at the moment. And obviously what we're seeing right now, if we go across the time frames, this is 1 minute, this is 2 minute, this is 5 minute, this is 10 minute, this is 20 minute, and over onto the daily. We are seeing that reflected very clearly. You can see we've got the trend, again, got the trend monitor on here, works in exactly the same way. This is an index, but it can apply to any other chart you care to name. I've got the trend dots on here, and the two of them working together just they tell you exactly what is going on. And if you're an intraday trader, it doesn't really matter what you're trading, whether you're trading spot Forex, whether you're trading futures, whatever chart you are trading, there will be an element of risk in there, because making money in this business is really only about one thing. It's understanding the balance of risk on and risk off across the related markets. That's it, because money chases reward, or it chases safe haven. And that is happening literally second by second, minute by minute on an intraday basis. And if you have the VIX up, it will tell you instantly what is going on in terms of risk sentiment through the prism of options in the options market. In other words, the balance of puts and calls buying. And that's what it's all about. And when you boil it down to that essential, it really is very straightforward. Most traders don't really understand it, can't get a handle on it. It's something we cover in huge detail in the Complete Forex Education Program, which I have to say, even if you're not trading Forex, is worthwhile investing in, because it will teach you so much about the relational aspects of behavior. And what's more important is that in this case, as indeed in many others, it is the Forex market that signals things, these disconnects, these unusual pieces of price action, which ultimately flow through into the broader markets. So even if you're not a Forex trader per se, and I would say exactly the same thing applies to a lot of the indicators. You know, we have a lot of index traders, customers, you know, they don't have the CSI. Well, you know, the CSI is giving you a straight heads up on all the risk currencies, whether you're looking at the Swiss franc, whether you're looking at the yen, whether you're looking at the dollar. You know, this business is all about risk. It's really not about anything else when you boil it down to those bare essentials. And as you can see here, what's happening, we've had this little bit of a pullback in terms of the VIX. Now the VIX is rising again. So if the VIX is rising, we will expect to see equities continuing lower. So we will probably see a little bit of a rally, and now equities are turning down as the VIX is turning up. Any questions on that one?
Yeah, there's a couple there. Someone, not the first one, who answered this. Where do we see clearly the correction on the volatility?
So where do we see the correction on the volatility charts you have up? The little correction I'm referring to is here. Bear in mind, this is a 1 minute. You've got a little correction here. And remember, when the VIX is rising, equities will be falling and vice versa. So we've got a little correction here. So in this point where the VIX is falling, you would expect to see a minor rally in the equity markets. And now the VIX is re-establishing, if you like, its bullish trend. Confirmed with the trend monitor. We have this little transitional phase. Now we're going back into bullish again. This, as you can see, this is 2 minutes. This is the point I was making earlier on. We had a slight change in color here. Sorry, take that away from there. It's a bit confusing. You can see there the little change in color, went into dark red. And basically what it was saying to you was, yeah, okay, potentially. But when you see that go back into blue, you know this is going to go back into blue and reestablish the primary trend, which in this case is bullish. So what we're seeing here is a primary, secondary, primary. That's it. Very simple. Primary, secondary, primary. We've even got a little one here. Primary, secondary, primary. Back into secondary, up into primary again. So the bullish phase for VIX is still maintaining the bearish phase for equities. In addition to that, we've got the volatility indicator itself here. So we've got the volatility, our volatility indicator on a volatility chart. But the principle is identical. It's looking at price action, moving outside the average true range. So when you see that, you're expecting the market to at least congest or possibly reverse. So it's, you know, we've had the volatility. It doesn't look like it's going to go any lower. We've gone into congestion, and now we're reversing and reestablishing the primary trend again. We've got a volatility trigger here on 20, so maybe we're expecting to see some congestion build around this region. It doesn't always follow, but you can see it here. We had a volatility trigger into congestion, back reversal. And on here, I've got the trend dots. And the trend dots and the trend monitor are two great indicators to work in conjunction together. Why? The answer is very simple, because the trend dots work very close to price action. So they will change first. They'll go into gray or they'll go into red. They've come back into gray. Now we're back into blue again. And they also move below the underside of the candle. In terms of the trend monitor, yeah, we had a little bit of a slight change here, but nothing confirmed. It didn't go into a darker blue. In other words, a potential trend, a darker red rather, just went into, into bright red, went into darker red. Nothing more than that, came out the other side, and off we go again. And, you know, on we climb upwards, and indices will be falling. Just push that out the way. This is the move on oil that we saw, the reversal. It's developing, and you know, traders will be wondering why that happened, didn't understand it, and you can start to see the changes in the trend monitor here. We've gone through the transitional colors, dark red, dark blue, out the other side into bright blue. Not a change here, but you expect to see it in due course. If you're on the 3 minute, it might already be working its way through there, or certainly on a 4 minute, not up to 5 minute yet, and certainly nothing in terms of 10, 15, and 30, because you are trading a different perspective. But what you've got down here on 15 rather, you've got a nice 2-bar reversal. If you overlay one on the other, what have you got? You've got a hammer candle on good volume. Very simple. Let's go back onto indices, see what's going on there. Here we go. There we are. This is on, this is just the NQ. And this is the little rally that probably reflects what we saw in terms of the VIX on that sort of time horizon. So we had the bearish phase, a little bit of a rally, classic VPA. What have we got? Rising market, falling volume. That's not going far, and off we go. There's a downside again. And, this is weakness. It's just, we're trying to push higher, but it's weak. Trying to push higher, but it's weak. And so on down the string we go, down to the 5-minute, down onto the 10-minute, down onto the 15-minute. And really, that's putting it all together. And it's, exactly the same as I was doing on the other chart with oil. Here you are, you've got the trend monitor here. Nicely bright red, right the way across the piece. Bearish sentiment remains fully in play for the time being.
Sorry, could you just move over, because I've actually got the NQ on.
Yeah, let me can I pass back to you?
And we can finish off that little section on the NQ, and I'll come back to you.
Yeah.
Okay?
Do you want to change charts? Yeah.
Yeah.
Yeah. Just going to switch off and change back to Anna. Hold tight.